Good evening, Nick Inman from VolumeProfileTrader.com. On Saturday, June 2nd, and the market a couple of days ago, let's see what the exact day is, the 30th, the market gapped open lower, had made no attempt to retrace its move. That was that should have been a heads up that this little up move was pretty much over. When the market told you, or when the market did not rally that day, the market was telling you that right now this downtrend that we're seeing in the market still prevails, and we should look for lower prices, or at least a test of the lower range. Well, we got that, and on Friday, the jobs number, we printed new lows, and the market continues to find its way lower throughout the week. As far as a downside target, it's still what really looks like is in the card. Is I'm just going to point out a few levels where the market has bounced and kind of go from there. Back on the 13th, we had a pretty nice bounce off of these lows, basically where the market's sitting now, and the market found found higher prices. Also, right below that are the lows for the year, which results in a gap at the 1253 area, and then the point of control at 1245. So this is, in my opinion, what should be a support zone for the market. It's going to be interesting to see if we get a decent bounce there. But as far as potential levels to trade off of or to target from the short side, this is kind of what I'm looking at, with the expectations of some type of support, but staying net short this market because that's what the market is telling us it wants to do. Similarly, the Dow, we broke down below this high volume area. I'd say the bottom of this, let's call it 12,000, about 100 points lower, should be some type of support. It's also December's point of control at 12,050. So we have a bunch of potential support here. And then from there, it could get as ugly as a push down through 11,800 or so. Nasdaq coming down to January's point of control. This trend line higher, the 200-day moving average. I'd say the Nasdaq looks like the one most poised to bounce with the potential, for the most upside potential. And I think that you just stick with the names that have worked, generally speaking, in the Nasdaq, such as something like Apple. Another one that comes to mind, I don't know how it's trading right now, but Amazon, I know we've had that gap. Now we're getting close to closing that gap in general, not saying that we're necessarily close right now, but it continues to drop lower. One potential level to look at is this cluster of volume, let's say late March. That could be a potential support, especially with the Nasdaq sitting where it is. I just want to check out Intel. That one's falling away from higher prices. IBM, just to look at it. Similarly, although the 200-day moving average, where it's been right to be a buyer right here in last August and last September, it's been a right to be a buyer of IBM at the 200-day, just to point that out. Some other names, or I should say underlines that are interesting. Oil continues to get smashed, which should be nothing but good news for something like the XRT retail in general. Look at something like Starbucks getting hammered, but as it gets hammered, expect that the bounce, assuming something like gas prices being low, there's going to be value with these names because they tend to do well when energy prices are lower. So just to point that out. Also, look at copper at the value area low for the year. I see that. Let me get rid of these drawings. I want to zoom out a little bit. Not that I put too much emphasis into this, but one thing I do see, and it's just to point out, is, one, major trendline support, and two, a potential for some type of, I think you see what this pattern is, head and shoulders pattern. But that would put copper, let's see, 464, 465, let's call it, to say the neckline 325. A measured move would be about $1.40 then lower than current levels. So $1.40, 330, we can do that math. Around $2. And then copper, in terms of potential, would be, that would be the measured move, and you'd be looking to be a buyer of copper at those levels. I'm not saying that this is going to happen, but I just want to point it out, just to be observant. So gold, on the other hand, a $63 move on Friday, 4% to the upside. What we basically rallied right up to is the bottom of this high volume area, the 50-day moving average, and this is looking like a successful, let's get it here, triple bottom. I would suspect a move back up towards 1700 or so. We have lower highs here. This could be a massive, well, what looks like, and it should be a little obvious, a balancing pattern, a consolidation pattern. On a weekly chart, maybe it best views this. You see, you could almost make the argument for a bull flag or something along those lines. If we get above 1700 and fail and make a higher low somewhere in this range where we've had resistance, watch out. I would expect new highs on gold. Similarly, but I don't think this is necessarily the way to play it. Silver, I think that you can be long this too off of these lows, and well, let's look at it. Every time it's been at this level, has it been right to be a buyer or seller of silver? Buyer, excuse me. We have trendline resistance. We see that. If we break above this, we should go and test around 35 on silver. That's a pretty good move and something that you may want to be a part of, especially because we have this cheap shot right here at these lows. So I'm just pointing that out. Love the way it bounced. Sure, it was short covering, or it was some speculative buying, but the point is we can define our risk and look for higher prices in both gold and silver. So back to the S&P. Overall, I think that we are close to some type of bounce on the market, in the market, whether it be more short covering, or maybe some long set who didn't buy at the beginning of the year, missed this entire move. They're waiting for a complete retracement, knowing that there was a gap at the beginning of the year, knowing that at the beginning of the year, so often, any rally we see, will eventually be sold into, and we will see a retest of the 2000 and, not 2000, of the year's basically opening price, or the lows, whatever you want to call it. Basically this 1250, 1260 level. So, be focused on the S&P, see what it's doing. Note that the euro had a huge bounce on Friday. Look at the amount of volume. We haven't seen this much volume since 9/6, or yes, 9/6, 2011. So this is pretty rare volume. There, it didn't mean a bottom or a top. Actually, I guess you could say it signaled the top, but we are looking for a potential bottom here, and if that's the case, then the S&P should rally, the rest of the market should rally, just from short covering, which is okay. The dollar, continues to make its way higher. But once again, you can see this is the highest volume for the dollar in the last year. And the last two times was at a low and was at a breakout level. So just be aware of that. So really, that's all I have to say. Have a good weekend, and I'll talk to you on Monday.